Good morning and welcome to Equity Story Trade Watch, Wednesday the 9th of November. I'm with Claude today, the two analysts, nothing technical at all. Before we start, Claude, I'm just going to quickly go through the Equity Story disclaimer. Pretty much in summary says that everything we talk about is in general nature only. So stock-wise, we look at their fundamentals and we look at their technicals. So Claude, just before we start on looking some stocks this morning, just overnight with the American markets, we're positive, but probably just waiting to see how these elections, the midterms, sort of fall. And we're going to get probably all the way through today, some news coming through, from America, and we're going to be watching that to see how that sort of comes through. However, I think the bets are that we're going to have pretty much of a gridlock in the US, which possibly being okay for the market. So I think the bets are at the moment that this is what's going to happen. That's why we had a green market, but you just never know. So we just got to wait to see how it actually goes through. And then we'll probably see a session on tonight, and we'll probably lead us through to the end of the week. So at least we've got a bit of a green start, which is okay. Let's start with some of the company's announcement, and I'm going to start with a couple from yesterday. And before I do that, I'll quickly switch on to the technical charting. So give me just one moment with that. And here we go. That's what I want to see, so everyone can see that. So we've got first company is SKF, and this is the chart. And the reason I want to talk about it today, so they came out with an announcement yesterday. It's up now 83% for the week, Claude, which is obviously a pretty good move. So the question is why? And there was an announcement yesterday where they've got a deal with McDonald's where they're going to roll out their technology in 6 stores on a trial basis over a couple of years, or 2 or 3 years, I think. And they're going to get 2 million out of that, which sounds pretty interesting because on 6 stores they can get 2 million out of it. So if they're successful with this rollout, this could be quite significant for them over the longer term. But
yeah. That's definitely right, Peter. It could be, but to provide the maybe some of the concerns about this would be, so this initial 3-year contract with $2 million total contract value, that would include some for implementation, because they have hardware that they need to do to put in LiDAR and basically tracking people around the store and what they do. And look, on top of that, basically, I was sort of saying, as I was saying to you earlier, this company has for a very long time been burning cash. And, you can go back a few years and it probably looks like it was on the path to sustainability. And I think even in their most recent quarterly, you can see their own little chart, how even with their net cash flows from operating activities, just excluding investing activities, they basically were on a path where you might have thought they were going to be sustainable, but they didn't. They fell off the wagon, and massive outflows there and capital raisings and stuff like that. And sort of my experience watching it over the last few years seemed to be probably not the great management for shareholders, because there's always another capital raising at a low price or whenever there's some good news. So when I saw this, the first thing I thought was, all right, how much cash do they have in the bank? Are they going to use this excitement to raise capital? And I don't know if they will. It's about 1.6 million burn in the last quarter. And I think, what did we say? They had about 4 million left at the end of, no, that's not right. 5 million roughly left. No, you're right. It was less than 5 million. I was looking at the wrong one. And so they had, 4.3 million left. So maybe they will be thinking of raising capital again. I'm not sure about that, but that would just be one thing that I'd keep an eye on.
Yeah. Okay. Look, perfect summary. And if you look at the chart usually doesn't lie, right? So you've got a chart that's going sideways, which pretty much tells you exactly what you just summarized, that maybe the management's not quite, giving their shareholders the returns that they need. Too many capital raisings, lots of promises, under delivering, and it's gone nowhere for 5 years, right? At least. So you've got to take that as a warning that they need to do better. And this particular announcement, while it sounds good and relatively could be good, we just got to give it time. We got to see how it all sort of goes through. So I would not be chasing it. So as you can see, the actual charts itself, it had a big jump, like I said, 80-something% for the week, but it just hasn't done enough for me. First of all, charting wise, plus fundamentally, I completely agree with you. I think let's just see, give them some time, give them 6 months to see whether they can follow through with this and they are successful with this rollout for McDonald's, because, you know, there's no guarantee it's actually going to be successful. So at the end of the day, there's still a lot of risk around.
Yeah. I mean, my main concern would just be also like how profitable is the contract going to be? Like if I think it was 4 stores, or however many stores it was. Let me just check that. It's live in 4 and going to be in another 4, an initial 8 McDonald's. So 8, it's 250,000 Australian per McDonald's restaurant. For that, they've got to go and install all of these systems, get the software going. Like, I wonder, is that going to be super profitable? Like, I would hope so, but that's over 3 years. So, you know, per store, we're probably looking at 80K of revenue per year. And I could definitely imagine, say, at the beginning when they have to actually go and set things up, that might not actually be that profitable in the first year. Presumably in the second year, when it's already running, it'll be more profitable. So it might be a little bit of a while before, even if this does work out well, before that flows through to the bottom line. But having said that, if they did announce, hey, you know, McDonald's is really happy with it and they're going to go and do it with 400 restaurants, I think that could be very interesting.
Yeah, look, again, I completely agree with your commentary right there. And it sort of reminds me of, I'm not sure if you remember this company called Yowie, right? Which
I do.
had the sweets in America. You know, they promised they were going to, you know, have all these stores in Kmart's.
Do you know this still exists, this company?
And never ever delivered, right? So
No.
promise and never ever
God,
delivered.
I think it was like its share price was $1 once upon a time.
Exactly. So the
like
hype was huge because everyone's thinking, oh my God, millions of dollars revenue. They're going to make billions.
And they've got a fair bit of actual revenue. It's just the profit that they can't find.
Exactly. And this is what we're just talking about, right? That this is sort of I always refer to back previous stories. How are they? You know, if there was any success, so it is not easy. Anyway, let's move on to the next one. LKE. So I just want to mention that one because I know there's a few people liking this story. And the other problem is it is in the hot space of lithium, right? So obviously people follow it. Another JCap, I suppose, rebuttal yesterday, and just talking in generally more negatives, which, you know, a shorter will probably do. It doesn't look great again. I think a lot of investors are just don't want to hear it, don't care from that point of view, because they just obviously blinded by just lithium in general, and they think everything's going to go to the moon. Saying that, I'm certainly not touching this. You know, we've seen they've lost their CEO. You know, there's a lot of questions still to be unanswered. So for me, pass. I certainly wouldn't be in a company that's got so many questions to be answered.
Yeah, I mean, the chart jokingly that goes up and looks like that and then keeps going down all the way out of the side. That's called the chart of the bag, where like people are bag holding.
Yes, it's actually the chart. It's not too bad right here where it's above the trend. It might go on a little bit, so there might be a pretty, you know.
I feel like if you zoom out, we're going to see a chart of the bag though. Like, it's just like it had a. What I will say with certainty is, you know, the amount of excitement and hype and promotion around this stock, like that's how you get a chart of the bag, because it's like there's this big oomph where like everyone's excited about it. It's like a sociological phenomenon. Like people are telling their mates down at the pub to buy it and all this sort of stuff. And there's a lot of like unsophisticated money that gets thrown into there. And then like what you have a CEO like quit and sell his shares, man. It says it all.
Yeah, exactly. And then the thing is, there's so many to play with, right? Lithium out there. Why put your money into something that's got that extra risk attached to it, right? With things. So I just find it from my investor point of view. You know, you might like it, but you just go, okay, well, there's other lithium plays. Let me play the other things. Wait till we settle down.
Can you look at the super long-term share price of Linus as a bit of a story?
LIC.
Yeah, LYC, like super long-term chart.
Yeah. Let's do
and
it.
You can kind of, I'm pretty sure. It was like many years ago. Yeah. Like if you go back all time, there you go. You see when it was massively hyped up. Like I can remember, like I was in university at the time and it got massively hyped up, you know, ahead of production and all that sort of stuff when it was just a story. And even though today we might look at Linus and actually say, you know what, this is one of the best rare earth companies on the ASX, just in terms of the consistency of its profitability. Obviously, I'm not saying that its profitability is that consistent. I'm just saying that it hasn't made a bad loss since 2018 or something like that. So like, it's not some complete, speculative one. And it's like that. Even that, if you bought it at the peak when it was super hyped up many years ago before it was producing, even despite all of its success since then, you still would be sitting on a loss.
Yep. And the thing is, I'll tell you the history of it, because I do remember following it from really early days. This was the hype. This was the actual boom in the prices of rare earths. We didn't last very long. Then they were on life support system for quite a long time. They were so much debt. They were recapitalized, so much debt. The Japanese actually saved them in a way. And then finally, by luck of the gods, really the prices of rare earths started to inch back up. The production started to ramp up, and really they're doing okay at the moment. So yeah, absolutely, I agree with you. I mean, this is the problem with the hype up stock at the beginning, where just the FOMOs come in, they think it's going to go to the moon. Usually is a false dawn. The first time or first couple of times around, it's only that when you get a company that's actually producing for a number of quarters or periods, then you can see in a normal environment to see where it actually stands. And I think we get a much clearer picture exactly what the company's about, probably the last 3-4 years, to be honest. So that's the truth of it right now. Yeah, and it is still like well below what it used to be back then. It was just really high, even though the prices shot up quite significantly back in those days. But yeah, let's move on to the next one. Let's go to NAB, and I'm just going to chuck it back on the 2-year so we can see a little bit better, shorter charts. And look, they come up with their update today, and I have to say it wasn't too bad. So I'm just going to go to the weekly. So it's down about 2%. I want to have a look today. What's the jump today? And up, is it up today? Yeah, it's up a little bit today, which is not too bad. So again, for me, all these banks are just dividend players, really, for those that are searching for dividends. They seem to be going okay-ish. The markets, there's positives and negatives for them at the moment. But generally speaking, they seem to be navigating reasonably okay through it. I mean, I'd just be interested to see, once we get further into higher interest rates, maybe worse conditions here in Australia, to see how they perform. But for the moment, okay. All right, next one, Orica. And please jump in whenever you've got anything else to say on
well.
mention. So Orica, I'm not sure if you follow Orica, Claude, but not a bad result today. I think much better than previous. So they also almost like a recovery, as you can see by the chart itself, right on the back of today. I'm not a huge fan of Orica. If you look at the longer term chart, and I'll show everyone that one, and I'll put it back onto the weekly. It's actually been a fairly poor performer. You can see if you bought this 5 years ago, you'd be still underwater. So for me, no. I think trending only. So you might get your little trend like from here to here, right? And you do that, and then you might have one from maybe in the next couple of months from here to somewhere else. But long term, it's just been a pretty poor performer. So
yeah, and look, just broad strokes on Orica as well. I'll chuck in the reason, I would argue, part of the reason that it's a long-term poor performer is it's just not that good a business. It's a tough business, very capital intensive. And at a price taker, I think, mostly with almost all of its products. Like, I'm not sure if it has any real competitive advantage in any, like maybe some geographical kind of advantages, but yeah, bit of a price taker. And capital intensive is actually it's quite bad that it hasn't done too well in the last 5-10 years when there's been lower and lower interest rates. At the moment, now it has debt that's going to go up. It has high capex. So yeah, look, that does mean that, is this business going to be around for a very, very long time? Well, quite likely it really is. But you've probably got to judge it on like how much of a dividend is it going to pay you. And that's where I say it probably falls short at the moment. To get interested in buying this kind of company, you'd have to get comfortable, basically that it was trading at a low enough price that you're going to make a return just from like good dividends over a long period of time. And even if the share price didn't go too well, alternatively, you'd want to see it with a much stronger balance sheet and run with lower risk than it currently is.
Yep, fair enough. And I think they've also made missteps previously. I remember with acquisitions and so on. So it's just been, just probably not very well managed, I suppose, in a way.
I think it's, probably a tough business as well, basically, but tends to go up and down, that kind of thing.
And highly leveraged to global economies as well. So it's not easy for them. All right, so we'll pass on that one. Let's go into CRN. So a couple of cold plays now in a row I'll go through. And CRN is the one that was in talks with Peabody. Peabody said, sorry, we're going to part ways, which is fair enough. So we had a bit of I suppose maybe a little bit weakish start to the week, but it's still holding on. Pretty good results today. I mean, you've got to give them that. Big cash flows. But again, it's predominantly metallurgical coal, which is in steel production. It depends how you view steel production over the next 12 months. That's probably how you're going to probably look at CRN and some of the others in this space. When you look at China, when you look at steel production, when you look at globally, we're talking about rising interest rate all the time, and we're talking about possible recessions globally. I don't think it's probably a place that's going to shoot the lights out. So for me, again, I'm pretty neutral to maybe negative on these coal stocks now, especially in this space. So it is one that maybe you can trade, but just be wary of it. And right now, it's a hold technically, but there's just, for me, I think it's almost like going 220s. That's enough. I don't think I don't want to go through it anymore. So I don't know. I'd probably be just reassessing where I'm going to go with it next. I mean, technically, like I said, it's a hold, but am I excited about it? No. All right, let's go to the next one, WHC. And we have traded it plenty of times previously. The problem today, they've come out with a big issue, that is the wet weather, and they've talked about that the production has suffered as a result. So it's not helping. When we've got yesterday, we talked about it right on our videos yesterday about the prices of coal starting to ease off, which potentially could see some of these high flyers, which have gone up 500%, Claude, over the last 12 months odd.
Yeah.
Not as if you're not making, you should be making quite a lot of money. So potentially look at getting out. And
you're definitely not going to get another big run like what we've just had. Because
no, I don't think we see another 500%. That's for sure. So I think that if there's going to be any gains, it's going to be probably pretty small in comparison. So I think, again, for me, more risk to the downside than the upside. So I'd be looking at possibly, again, just taking my profits and just looking for something else in the meantime. It's like I said, it's still a hold, but it's starting to look a little bit more dicey by the day, by the week. But just watch it carefully if you're trading these stocks in this space. All right, next one, ALG, which is Ardent Leisure. And I had an update as well. I just want to quickly go through that to see where it's at. Normally, we don't follow this stock. Sometimes we will trade it. It's actually, I have to say, technically looks pretty good. If you look at the chart at the moment, update looked pretty good because that's actually looking very, very good today. For the week, it's up 8% almost. It's just above the support lines, which is actually, what we look for as traders. And it looks like if it stays like this, we've got Wednesday today, so we've got a couple of days to go. But if it stays like this is a buy signal as well. This one, last for 2 years, it's been going up. You've got to, from technical point of view, you've got something. The only problem is, Claude, I don't like it. It's a fundamental story. So for me, the theme parks and so on, it's just not me. But can you add something positive to this? Do you know anything about it?
Yeah, I followed it a little bit. It's obviously had some problems over the years. Mm-hmm. It's got Dreamworld, SkyPoint. It's got the main event business. Mm-hmm. So it's that kind of business. And obviously over the long term, it's had some problems. It really started a big fall from grace when they had that accident. I think it was Dreamworld. Someone died. Obviously, they have to change their practices. Who knows how good those practices are, but that's got to be a priority for them. Let's just have a quick look at the actual, because these guys love their EBITDA and stuff, of course, because they got so many depreciating assets. Yeah. So first of all, look, I think so. What's happened recently is on an EBITDA basis, which again, take with a grain of salt, they've turned from loss making in the past 4 quarters to finally making a EBITDA profit.
Yep.
On stronger revenue. So yeah, look, in terms of the momentum in the business, it's probably recovering, and that's probably the trade. But like you, I would say this is not really a strong enough quality business by any means for me to want to be in it for like a long-term kind of situation where I think it's a good business. It's going to pay off either, best compounding or at least pay a good dividend stream. I wouldn't touch it for either of those things. I think you're probably just trying to play like a simple first order effect saying, all right, okay, things are reopening, people are going back to theme parks, so things are going to get better. But yeah, that's a very low conviction thesis. I obviously wouldn't do it myself.
Okay, I mean, we both agree then, not long term, just a trade if it's there, and it does potentially look like maybe a quick trade in here. So let's wait till Friday and see, and we will revisit it and see where it's at. All right, next one, REA, a pretty good story. One of the favorites of most investors out there, and it's been around for a long time, and it's probably one of the leaders in the tech space here in Australia. Come up with an update. Again, it wasn't too bad. I didn't mind it, but it's expensive stock. It's always been an expensive stock. Did you see that actual update from REA, and have you got any comments on that?
Yeah, I do. And look, my comment, it's more a borrowed comment. It's not necessarily my point of view, but a good guy that I follow on Twitter who looks at these like what's his name now? I've forgotten. Oh, David's his name. I can't remember his surname right now. Anyway, look, he made the point that analysts have been revising the estimates lower over the last 6 months or so on REA Group, just because, as you would expect, like, even though it doesn't kill them or anything, a slower and weaker property market obviously is not ideal for them because they're in the business of advertising property sales. You've got, a function of volume and price. Obviously, in a booming market, you've usually got more volume, and also you can charge more or put up prices more easily. So that's good. Like, as in, I agree with that point that basically probably the momentum on this business, the change of situation for it is negative. So even despite the fact I think it's a super high quality business, I don't find it completely compelling in the short term on a fundamental basis. And then if you wanted to take the long-term view, I mean, you could, but I think it's fairly expensive. Now, that's not to say that there aren't other like businesses that are even more expensive. Like if I was a long-term holder of REA Group, I'm not so sure I would necessarily be trading in and out of it. I might just hold it for the long term, and that would include holding it right now.
All right, and I agree with, again, what you just said there. I think I'd be more interested in buying this maybe around the $60-70 mark, to be honest. It's just so expensive. They are coming up to a tougher period, like you said. The chart's looking like it wants to go lower. So all these things point to not to be in it at the moment.
Yeah, I think you can like probably under $90, and I'd be starting to get like interested, like just because I do think it's a good quality business.
Yep. Yeah, I agree. I mean, look, it's always been a favorite of mine, but I could never never get myself around to buying.
Yeah, it's always felt too expensive to me, basically, to my detriment.
Fair enough. We both agree. Let's go to the next one. And that is one that we follow, Claude. This is a little gold story, Mika. And they are Explorer in Australia. They had more results today. And I'm just going to have a quick look. They are trading at 6 cents. And I think today, let me just have a look what they are doing today. Up 0.02. Look, the results itself, and actually I'm gonna bring that up because this is going to be, I think, the last story we're going to talk about, and I want to show you what the results all are about and what we're really chasing. And look, the results are okay. I mean, there's nothing spectacular in there. However, it does give you the perspective, or the larger perspective, that this story, and I'll bring it across here, you can see, could get quite interesting with more time, right? So just need to drill more. So today they've come up with these results here with a new load discovered. So they've got this nice high grade, but it looks a thing load here. They call the driver load. There's another one called now wood load that they've named, which is pretty close to this driver load. And they've come up with some interesting results to start off with, 16 at 3, 12 at 2, 12 at 1.3, and then gets a little bit progressively worse, right? So this is maybe discounted, but these are okay-ish. But they've got another 25 shallow strike extension holes and a further 43 shallow strike extension holes from the driver load. So a lot of information still to come. So for the traders out there, if you're still in this, it's a hold for me, right? And I know yesterday, Claude, there was a question, which commodity do we think is going to be the commodity for 2023? And, Dave being Dave threw the question at me. I couldn't answer it. You did quite a good job.
No, I just had a punt.
And you gave up your thing. And I think you said the rare earths, wasn't it?
Yeah,
right?
I was saying, oh yeah, maybe rare earths, but that's sort of low conviction, just a guess,
No, but that's okay. I mean, at least you've said something. I was like sitting on the fence. I'm thinking I just need more time to think about this because I just can't go. Anyway, what I actually come up with, pretty boring, but I actually come up with gold, and I'll give you the couple of reasons why. So I'm thinking, right, next year, if we're going to have that recessionary maybe conditions with higher interest rates, I think what we're going to see probably maybe in the first half, we're going to have a weaker American dollar, which usually plays into the hands of gold, right? And I know gold's a little bit different than it used to be, how we used to trade because of this new, new tech and new other investments like your cryptos and everything that popped up. But I think it's still got a little bit of possibility of gold. So I
also heard the idea that as crypto goes down, maybe gold goes up.
Oh, okay. Well, maybe that's a good thing then. Maybe that's going to happen. But anyway, so I think if we have that scenario, so this has to play out. I think maybe we'll have a better time for gold, where inflation also, store of putting something in something physical usually is a good thing. So potentially, I'm thinking gold could do okay. So I am saying I just don't trust the commodities for next year, especially if there's going to be a recession. So I'm going for something lesser commodity, more of a, I don't know, they used to be called a hedge, right? I don't even know how, but anyway, gold. So I'm going with gold for next year because I know that was a question for me. So that's why I'm looking at, for example, like Mika, I'm still happy to hold it. And I'm looking at also an NCM. So I'll go back to the chart and quickly show everyone the chart. And I think he's starting to look better and better. And I know Dave's pretty keen on it. On the chart because we are trading it at the moment. So the last thing I'll show is the chart of NCM, and you can see that one. So potentially, right, we had a gold jump about $20 last night, Claude. So maybe we've got a start of something potentially on a bit of a trade. And you can see NCM. This is why Davis put it on. That's why Davis has always been pretty, I suppose, happy with gold. Even though it wasn't doing much, but finally it's getting over $1,700. Can it sustain that? Maybe we're on the way. So I am saying, okay, I like it. I think maybe next year is gold's turn. So potentially, if you guys are in it, hold on. It's looking all right. All right.
Yeah,
anything else to add with that, Claude?
No, interesting. Thanks for that take. Yeah, look, all I'll add is the very basic thinking behind me saying rare earths was just that if there's more tension with China, then I think a lot of the supply comes from China, so they might withhold it.
Fair enough.
That's pretty simple.
And that, I suppose you can make a case for rare earths like that. Absolutely agree with that.
It's more of a punt though, right? It's just like it's not really.
Absolutely. I mean, look, I tell you what. There's always a saying in the commodity space, especially, is that analysts never get it right with predicting whether commodity prices will be in 12 months time. But anyway, we always have to try because that's what we're expected to do. So,
yeah. Cool. All right. Well, thanks for that today, Peter. I enjoyed the chat.
Yeah, absolutely. Thank you very much. Everyone have a great day trading, and we'll again see you tomorrow. Cheers.
See ya.